Splashcreen. Wake up, motherfucker.
Yo, what's up? What's up? It's April 24th. All right, Friday. Okay. Let's see what's up going on. What's going on? Well, the Intel's still going up, huh? So after Texas Instruments, Intel did the same thing. So we're still bullish, baby. We're still going to 4,500 on the S&P. That's what's going to be. So next week, it's going to be a big week on Wednesday. Apparently, I double checked this. All the major earnings are pretty much going to be after Powell speaks on Wednesday. Okay? This is insane. Usually, Microsoft reports on a Tuesday, or Google decides to report on a Tuesday, one or the other. But somehow they all decide to report on Wednesday. So outside of Apple, which reports on Thursday, you got Google, Microsoft, Facebook Meta, Amazon, Qualcomm, CLAC, CLA Corporation. And yeah, that's like, holy crap. Oh, I don't know, guys. I don't know, guys. Everything's going to rely on Wednesday. So you got Powell speaking just before the market closes, right? And then you got that all after the market closes. Whoa. Bro, I don't know. And you got semiconductors at all-time highs because of both Texas Instruments and Intel. I think a lot of people were bearish going into Texas Instruments, got burnt. And then they were bearish again for Intel, got burnt. They doubly got burnt because when those things popped up in the morning, they kept going up or stayed the same. So Texas Instruments report on Wednesday, and then so Thursday you got a pop. And then you got Intel report after hours on Thursday, pop on Friday. So you ended the week pretty much on an exuberant high note. Very high. I don't know. It's very hard for me to say, well, I got to be bearish. Nope. The only dip you got was software. You got some dips on software. So you could have took some advantage of that, but I was hoping there would be a better dip if Intel crapped out, but it didn't. So nope, guess not. So if you look at here, this is the ratio. All right. We got the ratio of semiconductors to the S&P 500. And this is a monthly chart. And I do my DeMark here, right? And with the D waves, if you go all the way back to the .com era, the projected targets, the projected targets from the .com era and also the great financial crisis, they basically gave you this target way back when. So around 10 to 20 years, we were waiting for this moment, and we're here. We're here again, where semiconductors highly outperforms the S&P 500. So it shouldn't have been a surprise, I guess. We're in a long range since October. That was true. So let me show you this. Okay. Let me just show you this too. So let me give you this too. See? Why didn't I just dump everything? I did that last year, SOXL, April. And I pretty much got everything out during January, right? The last bit. I sold some October and I sold the rest January into February, right? Before the whole Iran thing. This whole extra shit is like, huh? What? That is like that's the beginning of the next bubble, bro. It's like, dude, if everybody's like running into semiconductors again and not going to software, this is not going to end. Like, what's going to happen probably is the semiconductors is going to pull back, right? They're going to be a point where they're like, dude, bro, everything is now 40. Like, dude, Intel is 80 to 100 times forward price to earnings. It's way overvalued. Okay, it's way overvalued, but people are buying it as if it already split into two companies. It's already like doing everything right. Like they basically bought everything as if we are 5 to 10 years when Intel is doing good. So they bought everything ahead of time. You know, that's the thing with the markets, right? It's all about like expectations. Now they're really expecting that Intel is a better buy than Nvidia, right? They don't want to go to Nvidia. Okay, they look at Intel, they're like, forget it. We can't buy Nvidia. Nvidia already did its thing. So we have nowhere else to go. We might as well go to Intel because quote unquote it's cheap. It's cheap if you think it's going to do what it's going to do in 10 years later, right? But the thing is, there's a lot of things that will happen between now and 10 years later. They're buying it expecting what Intel will become, is what I'm saying. And what it will become is way down the line, not now. So I think, and the thing with Texas Instruments too is like, wow, you know, when I saw that thing move how it did yesterday, it's like, wait a minute. This never happens for Texas Instruments. Texas Instruments is a boring company. It's mostly in industrial and automotive chips. Like they're trying to get into AI, and it just went up 20% and it held it. It didn't fade at all. And I'm like, shoot, that means Intel is probably going to do the same thing as long as they say the right stuff in earnings. And they did say the right stuff on earnings. So it's like, damn, these guys are desperate to hide out and go somewhere because there's only two sectors right now that people want to buy: oil, gas, right? And semiconductors and quote unquote hardware data center related. Um, they just don't want to buy anything else. They really are scared, right? You saw that with software. You had ServiceNow, which scared everyone out. Like ServiceNow, and then IBM reported too, right? And I guess both of them scared everybody out of software. And they were like, whoa, get out of software. It's not, get out of that. And it's like, okay, but there's what else you want to buy? So there's nothing else to buy except semiconductors. Yeah, run into semiconductors again. Because after Intel went up early this morning, I saw Qualcomm pump, and I saw some others pump too, but Qualcomm I noticed. And then what else? What else pumped? Let me see. So I have a list now. Qualcomm. There was one other that pumped too, but I forgot now. But in any case, yeah, damn, this about Intel pumping. Yeah, that's just about Intel pumping. You didn't miss too much. I saw it just, but didn't buy in though. That's what you got to wait for. You got to wait to see if it opens up and dumps, because usually Texas Instruments, if it pops, it'll dump. Intel, if it pops, it'll dump. But it didn't do that. See, Texas Instruments yesterday didn't do that. And then I was kind of like thinking, whoa, if Texas Instruments can do that, Intel definitely will just stay high for sure. It's not going to lose it because people don't want to go anywhere else. They're afraid to sell now. They're too afraid to sell. So Sock sell next week? No. I bought Sox X. Sox S. No, I'm not boarding software. It's too high. It's too overloaded now. People are just running in there because they feel like there's nowhere else to go. Because I saw all the other ones. I saw Qualcomm go up. Qualcomm reports on Wednesday. And then I saw another one go up too. AMD. AMD was that one. Yeah, AMD reports in 2 weeks. It went up. So it's like everything already has gone up to the point where, dude, you got none of those other ones reported earnings yet. Everything is, so that's what I was afraid Intel was going to do. Intel was going to go and pump everyone up because of optimism. Just like IBM and ServiceNow scared everyone out of software, Though Intel and Texas Instruments just pumped everything up. So I bought SoxX because I noticed two things though. I saw that there was a lot of volatility coming in. So looking at this ratio chart, you see, right? We are higher than the dot-com high. It doesn't mean I'm bearish on the market. No. What I'm saying is that like this thing will probably pull back and it'll trick people into October. Okay. All right. We're going to pull back and we're going to go sideways on semiconductors. People are going to get more bearish come August to October into elections. And then what's going to happen is that semiconductors is going to go up again later, but not now. Right now, everybody is trying to front run everybody else because what's happening is I warn everyone, like the thing that happened with Iran is like we have a ceasefire, we don't have an end. If we actually had an end to the war, we probably would have sold off because people would have took away their puts. But because people are still afraid of Iran, they left their puts on, right? They left all their puts, their shorts, because they're hedging. They're worried about the future, but that's going to make the market go up even higher now because nothing's going to happen in Iran, right? Nobody's going to shoot at anything yet. They might shoot later, but not now. But because they kept all those short positions on, every time the market moves up a little bit, it's causing all those shorts to just create like the mechanics to push the market even higher. That's it. That's all it is. That's it. Yeah, nothing is. It's just expectations. Like they're overly optimistic about semiconductors that they're willing to overpay for semiconductors, but they're not willing to overpay for software. So I'm gonna do some like little things here. I'm gonna show you some fundamentals here. But you're looking at this, right? You look at this chart. You're like, whoa, 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 whoa. We're way too high now. We're way too high. If you look at this, we are right on schedule. We are going to hit those levels. But that means we're probably going to pull back at some point because we already hit a 9 on a DeMark. Okay. And there's probably not much more to go here. So we are going to pull back at some point here. But that means the money is going to come out and has to go somewhere else. And we're going to have to figure out if software is going to be the temporary place to juice up everything. All right. So that's the only way the NASDAQ can go up even higher and the S&P can go to 7,500 because software can't do it all by itself. Software, no, it's not gold. Gold, no, it's not gold. Gold's going sideways. The gold failed. Gold completely failed. So because you can look at the pink zone I drew for gold miners here. Okay, so here you can look at gold miners here. You see this? See that? You see that? We went up to the top of the pink and we went back down to the bottom of the pink. We're just going sideways again. We're just going to keep going sideways here. People are going to be bored of this shit. They're going to be like, okay, you go back to the top of the pink. You go back down to the bottom of the pink. Top of the pink. Yeah, we're just stuck here. That's it. Nobody's going to be interested in this. So that's it. That's not where money's going to be flowing. If you look at the Chinese market, though, they are probably buying a lot of silver right now because they need to build a lot of solar cells. So I wonder what silver is going to do in a while. But gold, no, it's not gold. It's not gold. People are just running into other stuff. But yeah, I don't. If you look at the range that was built here, I'm not really surprised because if you look at here, this was a huge range that was being built since January, right? We just went sideways, and then when it failed to break down below this purple line, we got that bounce into the yellow. We went over, right, with taco, and then after the taco, it just went bonkers because all the analysts kept upgrading their projected earnings estimates. Okay, they just kept upgrading everything into the earnings. and we already went through Intel. That's it. You got everything you wanted. Okay, you got everything you wanted. Honestly, you got everything you wanted. I think I have a let me see. I think I have some cycles here with gold and oil. So let me see what I got. Okay, so let's go back here. So let me see. Blah blah blah. This is gold. Gold right here. I think we're probably gonna go up into early May, mid May. So we're probably going to back to the top of the pink, and then we're gonna go back down to the bottom of that pink zone into late May, right? Going into June. So I think we're just going sideways. I don't think any of this is gonna make a major move, honestly, unless I see silver acting a little bit better. Maybe we can get a good push up, but silver has to work the right way. But I don't know. I doubt it. I doubt it. And the other thing too is let's see. Let's see if I got that. So that's software. Okay. This one. No. Hmm. Yeah, I thought I had the oil one. Let me see. I got the oil one. Okay. All right. So this one's the oil one. All right. You see that? Okay. So I think August is when I'll be bullish in oil again. So sometime around August. I think I did one with the ETFs for the oil companies and natural gas companies. I think around July, I said last time, July would be where I'll be starting to look to buy. But I think in August, going into November, is when oil will start picking up again. But for now, we're going sideways in oil into August. Okay. That's probably what's going to happen. Maybe probably longer into September, but that will be giving you enough weakness. You know, everybody's chasing semiconductors, and then after that, they'll probably be chasing software. They'll be chasing anything that's AI related, and they'll get bored, right? They'll get bored really quickly. That's the thing. You gotta look at the psychology. They'll start looking very bored at freaking oil. They'll be like, man, why am I still in oil? It's not doing nothing. You know, they get bored, and you know that's when you get in. Okay, sometime around July. That's when we'll be getting out of tech. We'll be getting out of software. I mean, there'll be some semiconductors that'll be still good, right? Like I said, air will be good. That's one. There'll probably be some other ones that might still be doing good. Rambus was another one that was doing really well too after the Intel. But if you look at it overall, this was the projection for the S&P 500. It was like, this is not a surprise. There was going to be a dip in April. Okay, we got that dip. That's why I was like, yeah, buy the dip in at the end of March, going into April. That's what's happening. I didn't expect semiconductors to keep helping the whole market up, which is crazy because the semiconductors is up like 50%, okay, from the bottom. And then when you look at the S&P 500, it's only like 4%, 3 to 4% higher than the high of Halloween last year. So, okay, finally we beat bonds. So the bonds would give you 3.5% over a year. So after 6 months, that's like what, 1.75%. Okay, now S&P gives you 3 to 4%. Wow. All right. The S&P finally beats bonds after going down and going back up. But if you look at semiconductors, it's like up above like 30 to 50% above what it was in September, October. So you need 30-50% to give you that 3 to 4% boost in the S&P 500. Is that sustainable? Like, so the semiconductors have to go another 30% just to give you like 2% in the S&P 500. Like, seriously, that's not happening, bro. We can't do that. So either software has to make it up, because software right now is underweighted. Everybody sold so much software stocks that like it has very little influence on the S&P 500 compared to like the all the hardware stuff. Okay, semiconductors plus hardware equipment plus data center stuff like HUT, IREN, Core Z. Those things will probably help out the S&P more than any of the software right now. It's crazy. Um, but probably, yeah, well, yeah, you're fine, because it's just gonna go sideways. I don't think it's gonna break that pink. I think it's gonna go up based on the cycle stuff I'm looking at, but yeah, that's not guaranteed, right? But whatever, we'll see. Silver probably will have to help you. Um, yeah, okay, you saw, yeah, yeah, yeah. It's tough. It's tough out there, but I want you to look at this in the way that I see it. Like when we got around to October, so you can see the peak of this was in the summer, and towards the fall you see it's dipping off. It doesn't mean like it's going to go down. It just means that like there's less and less likelihood of it going to be a big move up. So when you're in a bull market, when I look at this, all I'm seeing is like, well, it's going to be very hard to go up to a new high. So it's going to go sideways or dip. So we went sideways and we dipped. And now that we are going up here, so between April and July, you see it going up. That just means that it's hard for me to be bearish now. Like, I see semiconductors and I'm like, I can't short it. You ask me, can I do SOXS? Nah, I can't. Even though it's ridiculous, even though it looks crazy, it keeps going up and up and up every day. I can't short it because according to this, I got all the way up into July. So only until July do I think like, well, okay, maybe it's safer to short. Here is not safe. This thing can be more irrational than ever and keep going up until July. I don't think it will, but that's when you have to be very careful. You cannot be when you see this cycle going down, it's easier to short because you're like, well, every time it pumps, I'll short it when it starts moving down, because we started moving down in March, right? Since the Iran stuff. So it's easy. It's like the cycle already said it was going to be weak until April. So why not keep shorting it into April and then see what happens? Once we went over to the new quarter, it was like zoom, zoom, zoom. We flipped the script and now it's way harder to go down. It's way easier to go up. So that's how you want to look at these things. Now, this is a shorter cycle because this was using a daily chart, right? So the daily chart gives you where the major influence is. The major influence is still up until July. When we look at the shorter ones like this one I use like the S&P 500 futures, 300-minute chart, 5 hours basically. So I'm using the futures. So this is a shorter term. What this will tell me is like, okay, when's the next dip, right? We got the dip in software. We didn't get the dip in hardware, semiconductors, essentially. Okay, but there's still probably a dip going into early May. So something's going to happen to push this down. Is it Jerome Powell? Is it all the earnings on Wednesday? I don't know. Maybe there's something that will happen over the weekend that'll make it go down. Because when I look at how the market did, so let me get rid of this and look at the chart. Okay, let's look at this. Now let me do 15 minutes. Okay. So if you remember, I drew this last week because when you look at the 15-minute, you saw some big red candles during the day. And then all of a sudden it got saved, right? So that's what you want to see. So if you look here, somebody came in midday about lunchtime Eastern and saved it. The low here was the low, like just below the bottom of Tuesday's low. So on a Wednesday, it was starting to go down, but it didn't break it. Okay, and went back up. And this bar was like 0.69. Okay, negative 0.69. Now, remember that number. The next time we had a huge bar was here, negative 1%, just before close. Just before close. So this probably was some Iran shit. I don't know. This probably was some Iran shit. Who knows? I don't really care about the news. I just look at this and go like, well, we didn't break the bottom of this low here the day before. So every time you look at this, you're like, well, what's going on the day before or the day of? You got to look at it. You go like, well, I don't see anything that says it's bearish yet. And then you look here, we're getting big candles. We're getting big red candles yesterday. So when we had Texas Instruments pumping it up, semiconductors up, it must have been some Iran thing, I guess. Something came through and it pushed it down, but it got saved again, got pushed back up. We didn't drop below the open of this, right? We went below that, but then we popped back up, and then we closed up here. Well, can't be bearish yet. Got to wait for Intel. Intel pop. And then we get this, right? And then the first time it started fading right away. It started fading and went back up. It's like, well, can't short it there either. Okay. So you see some volatility coming in. Like it wants to go down if there's something to make it go down. But as long as there's nothing to really make it go down, it can't go down. All right. Because we passed the point. We've passed the gamma line. This was your last chance. April 15th, tax day. This was your last chance. After that, no way. If I look at my 78-minute chart, look at these moving averages. It's very good. Very good moving averages. I can't short this. Look at this. On the 15th, right? It went down. It didn't break it. It didn't break that purple one. And it went back up. It's like, well, can't short that. It can go up. It can keep going up indefinitely. It can pull back and it will just bounce right back up, right? There's nothing here to tell me that I want to short this thing. Really nothing. Nothing here. Nothing here. Absolutely nothing. Okay. That's all I gotta say about that. Yeah. Yeah, I use the Joe Rabel 18 to 40 because when you use the 18 and 40 with the Joe Rabel system, it's 18 and 40 everywhere. So if I look at the 15 minutes, it's just 18 and 40. If I look at 78, it's 18 and 40. It's if I look at the daily, it's 1840. If I look at the weekly, 1840. Monthly, 1840. That's the good thing about his system because he makes everything fractal based. I don't need to change my settings for what I'm looking at. Everything I do is 1840, 1840, 1840. So that's why I like his system because I don't need to have a different setting for different time frames. I can go to 78 minutes, go down to 15 because 78 divided by 5 is around 15 to 16 minutes. And then I take that and then divide it by another 5 and it gives me 3 minutes. And I go 3 minutes, I keep the same setting. I don't need to change anything. 3 minutes, I'll just use 18 and 40. I don't need to change it. So that's what I always use. Okay. And then you go 3 and you can divide by 5 and then go down to the seconds, right? If you really want to. But yeah, I don't see anything. I don't see anything here. All right. Except from April 15th. That was the last time you got some crazy candles down here. Okay. So if you look at ever since like Monday when I told you guys to buy, go long, like how many red candles here matches the red candles we saw in March? Like honestly, right here. If you look at the 78 minutes, like they're small, they're tiny. These were the largest ones in April 15th, and we couldn't even break anything. So sorry, can't short it. I can't short that. Even though I think this is ridiculous, I can't short it. It makes no sense. Like we could look at Carr, right? Let's look at Avis. Right? Look at this. I'll use 78 minutes. Look at this. Let's say I go long here, right? I can't short it. I gotta keep being long. The only time I can be short is when I see this, right? I saw this and I see this. I see this big red candle. This is bigger than this one. And then once we get to a new high, I see this and I see two red candles together. When was the last time you saw two red candles together? These two. And then after that, you saw this big red candle. That's probably it. It's over. Game over. Bye. I'm out. I quit. You probably could short right here if you dared to, and then just got money that way. That's all you can do, because everything is just trend following. Everything is just trend following. It doesn't mean I can predict the future. All I can do is like I can't fight the trend. The trend is going up. I gotta stay long. Even though I hate this, it makes no sense. It doesn't matter. Oh shoot! Look at this. Big red candle matches this big red candle. We're touching this. We got three red candles at once. That's over. It's over. It's end. It's over. Yeah, that's how you would look at it. So you can trade this if you want, because it's pure psychology, right? It's pure psychology, pure nonsense. Eventually, the psychology is broken once you see something break the pattern. If I look at stocks, do I see any change in the pattern here? No, I don't. And I can go down to 15 minutes to see if there's any kind of hidden pattern. Like I would have to go to the smaller time frame. I'm going like, well, I see this. There's something happening yesterday, but then Intel came through and it's like, well, nothing. It's gone now. Whatever happened yesterday is gone now. I can't do nothing here, right? Like this could have been something. This could have been the start of something big, right? So let's go back to Avis. Like I could go back to Avis and be like, well, okay, I have like 15-minute chart now instead of the 78. If I looked at here, this looks pretty gnarly, right? I have to compare it with the last time it got gnarly here. This time we went sideways for a little bit and then we kept moving up. This time, okay, we got, but then you see this, we broke below with a big candle and it's equivalent to this one. Then I start getting nervous, right? When you look at compare to this, and compare to this, that's what you have to do. You have to look at it comparatively. You kind of look at it like, okay, what happened before and what was the response before? This one, it got saved pretty quickly, but the second time, it's like, whoa, dude. And then the next few candles, you see how weak they were? The next 15 minutes. And then you see the third one start going down even further in the fourth. You probably could say, like, I get out here. I get out at the low of this candle here. And it's just like, I'm out. Or you could start short. Either you quit your long or you get short. Either way. But that's a major difference compared to what you've seen before. So that's what you got to do. You got to go down to smaller time frames and see, like, compare it with the bigger time frames. If you look at the 78 minutes, you know, you're not worried until you start touching the purple. All right. Okay. So then you go down to the 15 and you're like, wait a minute, we went below the yellow on the 15. Uh-oh. That doesn't look good. And then now we're below this. Now we're starting to go below this last red bar here. We're starting to drop below it. Okay, I'm out. So that's how you should look at it if you want to trade it that way. That's how you would do it, with just moving averages, with just two moving averages. You're just trend following. That's just how you trade it. Yeah. Yeah, right. Correct. That's right. Yes, that's right. That's what I'm doing. I had the stair steps, meaning the 18 in the higher time frame. That's correct. Actually, with this one, I put in the 5-day moving average, because a lot of people like to use the 5-day for some reason. They think like as long as you're above the 5-day, which the 5-day pretty much is like the 18 anyway, right? You see, they match up. Not all the time, but most of the time when you get a good trend. Yeah. So you don't really need to do much outside the 18 and 40 there, and then you can leave the little turquoise one is like the 18 of the daily. I think, is this the 18 of the daily? Probably, huh? Yeah, the 18 of the daily is all the way out here. Yeah, that's how stupid this one is. It's like, what? No. Yeah, so we're really far away. We're really far away from it, right? So when you get a good trend, you can't do nothing. But you gotta look. You gotta look. You gotta look. You gotta look. You gotta keep looking. Looking. Yeah. But that's the simple way of doing it. That's why you keep it simple. You kind of don't care. I can't predict the future, but when you see something like this and you wanna ride the trend, you can ride it. But every day you gotta check. You gotta go, yo, did it break the 18? Do I see any crazy red candles? Um, anything change? That's how you have to look at things. You don't really need these purple and yellow lines, but they help because I don't draw too many lines everywhere, right? I just look at the purple, I look at the yellow. If they have a very good parallel shape, then I know there's a good trend. I don't need to draw a trend line. I just look at it. It's like, yo, this is a trend. We're in a trend. We have a good trend. That's all right. If you look at, let's say, Oracle, right? It doesn't have a good trend. You see this? This is sloppy. That's why it's like you hit the resistance. You hit the resistance here, Oracle, right? You hit near it, 190, and then you pull back. Eventually, if Oracle breaks this 190, we can fly. We can start flying. But right now we can't. Look at the IGV, same thing. You see that? We went just above the blue and we fell right back. We went below the blue, we went on top of the blue, we came back in. Like, we have a hard time breaking away from this range. This was Taco Tuesday right here. We went up and then we just fell right back down. That's what you want to see. If you want to short semiconductors, you got to see a day like this. You got to see a day like this. I don't see a day like that. Every time we got Texas Instruments, it went up. It's like, no. Intel went up, it stayed up. We didn't fade it. So I didn't see big red candles coming through in the morning, like bomb, 15-minute candles. No, it just like stayed up here and then it just zigzagged and it went flat. It's like, come on, dude. Can't short it really. But I did short it. So I did short it. Yeah. And I'll tell you why I did. Because at the mark, they show you something else. They show you something else. So let me pull that up. But I guess we're fine. Yeah, I guess we're ready to go up higher next week. So I think there will be a dip next week caused by something. I don't think all those earnings will be so great, right, that they'll push it up. But who knows? Maybe it will. I don't know. But then maybe nobody wants to keep buying it into the next weekend. Who knows about that? So let me show you. Let me show you like the 15-minute here. Okay, so let me get rid of this. Let me get that back up. Okay. All right. Okay. So this is the first time I've seen this. We have an A. We got an A, baby. So this is a 5, right? So I've been waiting for this 5 to finish. So we got a 4 over here, and then after that we got Taco, and then we just kept going up. So this is the latest 5, This might not be the final 5. This might on Monday this might be gone, and then this will become a new 5, will go up higher. But for now, I see an A and a 1. Oh, okay now. Okay. So I decided, well, maybe I'll short here. All right, let me short here. And then after the market closed on Twitter, they said Michael Burry shorted SOXX. So he bought some puts on SOXX. Okay, Michael Berry is a perma bear. I don't know if it's a good thing that I agree with him to short it here. Maybe that's a bad move because he's not really a good indicator of anything. He likes to short things all the time. He said the market was going to crash in 2022. Didn't happen. He's had all these other things. Didn't happen. Like, he just lives off of like the big short. He called the 2007, 2008 crash. But after that, since then, his track record hasn't been very good. He probably sees shorts everywhere. It doesn't matter. Bubbles can outlast you for as long as it wants. We're in a bubble right now, and this is just the beginning of a bigger bubble. I think we're going to have an even bigger bubble. If people think this is the end of this bubble, you're going to be wrong. I bet this is going to go down into November. People think it's over, and they'll be wrong. And then it'll go back up to 8,000 next year for some unknown godly reason. And it'll be like, who cares? I don't care. It's a bubble. We got to follow the bubble, right? And you saw example of a bubble with Avis. Avis is exactly what it is. What's the go-to material to learn to mark? There is no go-to material, honestly. There's a book, okay, you can get, but even that book might not be enough. Pearl, like, yeah, you got to go to Jason Pearl. Let me get the book for you. Let me see. Ugh. Because that's the only book people use, because that's the only book people understand. But it's out of date, you know what I mean? It gives you the basics, but there's way more stuff to learn out of that. I'm still learning, but if you have to start somewhere, it's this book. Everyone starts with this book, The Mark Indicators by Jason Pearl. Okay, Bloomberg Market Essentials Technical Analysis Series. That's it. Once you learn this, okay, the problem is that you got to pay money to get these indicators. There are free ones, I'm sure, but they're probably not correct. Because he trademarks and copyrights all his algorithms and things. So I have to pay like $1,000 a year for this shit. Well, it's better than like the $500 a month plus $20,000 a year with a Bloomberg terminal. So only because it's cheap now that I decide to try this out. Okay, because once I have this and I have my cycle stuff and I combine them together, I think it'll be very good to time the bottoms and tops, because it's very hard for you to time bottoms and tops precisely without that. Usually, like, if you just use technical indicators, it's like, well, you're kind of off by a day or two, maybe you're off by like a whole week, and then you miss a lot of the moves. A lot of the juice is when you actually get the bottom and the top. Yeah, so you kind of see that here. It's like, oh shit. Oh, look here. That's a bottom. That's a C. Okay. That's a C. That's good. So, yeah, it's something like that. And then you can see all that. It's like 13, 13, 13, 9, 9, 9, 9, 9. So yeah, this thing, it could be. So we could have like a B. Okay, we could have an A right here. We could have a B later, sometime next week, and that'll be the end. Like, this thing could be it. This could be the final. And like I said, we saw Qualcomm and we saw AMD go up. It's really hard for me to see how much higher it can go. I think that's about it. Okay, so this is the cycles for the software. You see that? So we're going to go down until May 11th, I guess, according to this. That's where we're going down to. If we look at the IGV, okay, here. Let's look at the IGV. Okay, it's doing a good job trying to get back up because we had a 9 on the 15-minute yesterday and it was like bouncing. Okay, that's good. You saw Adobe, you saw Oracle go down. Okay, that's kind of okay. That's good, I guess. But I kind of feel like this is going to go sideways for a while. Okay, I don't think it's ready to just recover. But who knows? We have Microsoft, we have uh and I think Microsoft is going to be a big player in this. We don't have any big pure software companies outside of Microsoft. Everything else is communications. Google is technically communications. So Google is more communications. Amazon is mostly like retail, discretionary. So those two kind of are going to help the semiconductors more than the software. Microsoft is the only one that's communications slash software. So yeah, I don't know. Tough for me to say if this was the real bottom and this is just going to be temporary, right? It's just going to go sideways for a little bit. Uh, and then we have to wait until the first week of March for it to really get going again. We have to wait for like the semiconductors to get beat up. I think the money has to get out of there and go into software. If semiconductors keeps going up, there's no reason anybody wants to change out and go into software. So yeah, let's see. Amazon, yeah, Meta too, right? But Meta is also communications more than anything else. Oh, tough. That's gonna be a tough sell next week. Yeah, okay. All right. Let's see. That's it. But yeah, I saw Hut go down a little bit, but IREN went up yesterday. I don't know what it was that made IREN go up. I guess it was like some analyst upgrade, whatever. So it kind of poked his head out. So let's go back to 78 minutes. Yeah, you see that? Kind of. Somebody tried to make it go up a little bit. It was like, oh, okay, go up, stick your head out, and it came back today. Next target is 56. All right. The target here will be 60. 78-minute chart. Let's see. I think the daily has another target. If I go daily, 115 is my target. Okay, good. So we got another 100% on IREN if it can finally break out of this zone on IREN. Okay. So I think Hut, IREN, CoreZ, all of them can help. And yeah, like Eric was talking about like those leverage. Yeah, there are leverage ETFs for IREN, for CoreZ, for Hut. Yeah, there are. So I guess when the time is right, it's time to go long, baby. And we also have to look at Bitcoin then if we're gonna take care of that. So let's see what Bitcoin is. Bitcoin, I guess we're gonna have to wait until May 4th to see another uptrend in Bitcoin. So that's the short term on the 4-hour. On the 40-minute, we got till May 11th. So somewhere between early May to mid-May, probably we're ready to go up on Bitcoin. That'll help us with Hut, IREN, and CoreZ. So that should be along the same time as we'll start getting to see some software earnings too, right? So I want to see what's going to happen Wednesday. If we do get a dip, that'll be the dip I want to buy. And then we're ready to go up again late May. Okay. Everybody's going to run out early May, get in for late May, and then we can go until June. All right. Hopefully, somehow, please, don't break. Don't break this. All right. Yeah, shit. Okay. So talk about oil. Okay, that's oil. I think it's semiconductors. It's semiconductors, right? This is already parabolic. I mean, semiconductors. It's like okay. The next high in semiconductors is May 12th. Okay, so maybe there's a dip, maybe not. Maybe we just go sideways until May 12th. After May 12th, then we can go down a little bit until June. Okay, finally. So I think mid-May. If this coincides with mid-May, then yeah, maybe this is when the semiconductors stop stop being attractive and they start looking for other places to park their money. Then they'll take their profits out and go into software finally sometime around mid-May. Hopefully that's what it's gonna if that's what it's gonna mean. So that coincides with the bottom of software. So the top in semiconductors probably sometime around May 12th, bottom in software sometime May 11th. Okay, let's see. Let's see if that's what the game plan is. I don't know. Okay, this one is the SOX over I think S&P 500. So ratio wise. So I think we might be at the top of the ratio. So that means semiconductors should stop outperforming the S&P 500. Let the other guys catch up. Hopefully that's going to happen soon. And then this one, I think we do it over the Nasdaq or something. I guess we're done. Like the other Nasdaq stocks should outperform the semiconductors going into June. So I I'm thinking this is why I would say I think we're over with semiconductors. Like I'm not saying semiconductors is just going to crash and burn. I'm just saying like it's going to stop outperforming everybody else in the Nasdaq. The other guys in the Nasdaq are going to catch up. So for now, I think I'll short it because I just said whatever. Maybe it will go down now, but it doesn't mean it's going to crash like 20%. Okay, maybe it'll crash like 5 to 10%, maybe, and then it'll let some steam off and go somewhere else. Some of that money will go somewhere else. Hopefully that's what it means. And then I'll be like, okay, finally we can get the software now. Shit, because it's crazy. Everything now is crazy. Okay, done. All right. All right. I don't think I need to cover anything else here. Okay, good. Badass flick, Night Flyer. Watch it if you haven't. Didn't heard of that. Never heard of that. You gonna sit on the sidelines next week? Um, I don't know. I haven't decided yet. I mean, I did buy some of the software dip yesterday, but I wasn't really too confident on that. Honestly, I just thought like some of them were good. Like Adobe was good because that was kind of like, yeah, Adobe got hit, but otherwise it's like, I don't know. It looked cheap. Some of the other ones look cheap too. I don't know. How did Cloudflare look? I think Cloudflare was another one. I guess Cloudflare wasn't that one. I don't know. Adobe definitely looked cheap. There were some other ones too, but yeah. Palantir reports the Monday after. Yeah, because like Adobe's already at the bottom here, so it's kind of like duh, just get that. I don't know. Oracle definitely something I like, but I don't think it had a big dip, did it? I don't think so. Yeah, not much. It might go down some more, maybe. So we'll see about Oracle. But otherwise, I don't think I'm worried too much about it. I'm just waiting to see if if the semiconductors pull back sometime. But we'll see how the weekend goes, right? If Iran starts firing some shit, who knows? Yeah, CoreWeave probably is. CoreWeave, I don't know. Yeah, CoreWeave is kind of like too juicy. Juicy. I think I have another one I'm looking at is like Applied Digital. Oh, it's an older movie. Stephen King. Oh, okay. I don't think I've watched too many Stephen King ones. The only one I remember is The Shining, and that didn't even follow the book, or that It. It. How many It? Like, oh yeah, It. There's like, so how many It's are there? There's like so many It's. Who knows? Okay. All right. Okay. I think that's good enough. Shit. Let's see what another image I got here. Okay, here you guys go. You see this? Here's another thing. Seasonality. So seasonally, May to September goes down. All right. So we're about to end. We're about to end April. I'm not saying it's going to happen like this, but usually midterm elections, May to September is, yeah. There is a lot of force pushing it down. All right. Okay. So remember that. Okay. Then I'll put this back up. So May to September. All right. All right. Okay. So you remember that. And then let's remember what's going to happen here. So for me, with the cycle thing, we got July to October. Okay. So May is going to be a little iffy. I think a lot of people are going to be like May, June. It's time. I think you guys heard this before, right? Sell in May and go away. That's like a old Wall Street aphorism, I suppose, a saying. They always like to say sell in May and go away, because like starting from May to, I suppose, September, October is usually the weakest months of the stock market in terms of average performance. But midterms, it's really pronounced. Midterm elections season, they really affect that. I don't know how much it'll play into it. I think for sure after July, we're definitely going to see something. So whatever high we get into July, that'll be the high we get. And expect some real rough seas going into election. So says 20. Yeah, I know she likes the Ed Lee thing. Here, let me show you that. Oh, you don't like it, Quantum? Yeah. Yeah, it's probably not that favorite of mine. I did like The Shining though. Let's see. Let me see if I can find it. Did I save it here? All right, I did save it here. So this is the Ed Lee thing. I think this is what Samantha LeDuc was talking about in her video. We go up to 7,300 into August, then drop into October, and then we go up 7,700. So this is the plan. Okay. Yeah, Shining was definitely a classic. That's for sure. Yeah. So there you go, guys. I don't know. I think there's a potential we could go up to 7,500 for sure. So with the DeMarc stuff, I see 7,500 as my target. If it goes up to 7,500, oh man, software can't be doing it alone. So semiconductors and software could go up together for a little bit, for a short period, sometime in May. That could be the reason we keep going. And then semiconductors will stop and software will keep going up to help it maintain its level for a while before crashing in August. I guess that could be what we're going to see. I don't know. That's why it's hard, right? It's not like last April. Last April, everything dropped together. So you didn't have to pick and choose where you wanted to go. Now it's harder because it's like, oh, semiconductors is going up, but everything else is not really going up that much or going sideways or down. And then later it's like, oh, semiconductors stop going up. Well, then what else is going to go up? Then where do I go? I got to chase this. I got to chase that. Oh, really annoying, really hard, painful. So that's what makes it really tough. Because if you just bought like the S&P 500 by itself, it's like, wow, you got 3 to 4% now from October. Good job. Okay, I guess that's okay. Yeah, that's fine. Okay, so let's see what else I got for you. I got this one. Is SOX in a bubble? You know what? Actually, no. So we start by identifying in US industry data all episodes in which an industry experienced value weighted returns of 100% or more in the past 2 years in both raw and net of market terms, as well as 50% or more raw return over the past 5 years. So I guess this is a paper, Journal of Financial Economics 2019, Bubbles for FAMA. I don't know what FAMA means, but we haven't hit the bubble level yet in terms of this. So if we took the ratio of the SOX over the S&P 500 and we did this rate of change of 104, I guess what is this? Years? I guess years. I don't know. I have to double check this. I don't know what this is. Oh, 104 weeks. Okay, there it is. 104 weeks. All right. Then we cool. We cool. We're not in bubble yet. So that's why I was warning you guys. Everybody thinks this is a bubble now. Wait until we get into a real bubble. Because I bet you, this thing is going to go crazier into next year. Holy shit. You know what? That'll be a great time to make even more money. So watch out. Semiconductors, you think this is bad? Mm-mm. This ain't bad. This ain't bad yet. So we got a lot of time. We got a lot of time. All right. So let me show you last thing. So we got Intel here, right? 82. All right. Can't do nothing about that. How about Texas Instruments? You see that? This morning we tried to go down, didn't work. So if you look at this red bar here, start watching for these. So if Intel on Monday we get a red bar here, if we see Qualcomm, you see that? It popped and it went down a bit and it went back up. So on Monday, Tuesday, and Wednesdays, watch Qualcomm in the mornings. See what it does. If we get like huge red bars start popping up, that's when you know things are about to end. No red bar yet on AMD. Okay. How about Nvidia? Nothing, right? I don't think so. Nope. So start looking at the top ones. AMAT. Nope. LRC. Yeah, this one. It ended like this. Oh, okay. How about CLAC? Okay, still going up. That's fine. ASML. How about that one? Yeah. It went up, but then it's like going down. So like earnings was here. And then on Wednesday, you see it faded. You see this? You want to see something like this. You want to see it like this. If I start seeing more of these semiconductor stocks doing that, okay, now I'm more interested in selling. Oh, this is another stock that helped juice up Thursday. STM. So this is a European, French, Italian company. I actually in school I worked with them a little bit. So these guys. So yeah, this STM is just kind of like a TXN. They have a lot of miscellaneous semiconductor stuff. So usually it's never this exciting to be in this stock. But if you look at since April, it's exciting. But then you see here, look at that. You're getting large red bars popping up here. The volatility is showing up. So look at the individual stocks. Marvell, this one has been doing very well. I think this is one of the top performers in the semiconductors since Monday, March 30th. It's like 100%. That's a red bar, all right, in the morning. So pay attention. Pay attention to those stocks. If you start seeing like the big components of the SOXX start having these kinds of red candles appear, it's like in the morning you go down and then you barely like recover. You start seeing more of that behavior. That's when you know you're more confident. Okay, it's over. It's starting to be over. All right. So that's something to look at. That's something to look at. And hopefully software doesn't do that anymore. Software likes to do that. Then I can't, be like, oh yeah, let's buy the dip now. It's like, if you keep doing that, I can't buy you guys. All right, let's see how much time we got left here. Play some videos. I'm gonna play you some Boyd stuff after this video. A little bit. Okay, I got some time. And then we can continue tomorrow.
All right. April 24th. This is our Friday stream. Hope you guys had a good time last week with Alessio as he was going through Bitcoin and cryptos and the markets. So he always has such a unique market perspective. Well, welcome back. And I just see that Owen is posting a promotion that we have currently going for you guys. If you want a basic charting course, which is basically, Wyckoff methodology, synergy.
So these Wyckoff guys, they charge like thousands of dollars for their courses, okay? And if you notice, what they do is they never have indicators. You don't see them have moving averages, MACD, any of that. So I wanted to play you this because he starts talking about like why they don't care about that stuff. And I think eventually you guys should be like, when you look at the MACD or the ADX, whatever, they're kind of like guides, but they shouldn't be the only thing you look at. Like, I have to see something to happen. That's why I tell you, like, look at the red bar, look at this, that, because that's how they look at it. They just care about, they look at the volume and then they look at the bars. Okay,
break through the.
Okay, so let me forward this a little bit here.
And so on and so forth. So just like a regular stuff, and we'll see where it's going to take us. All right, let's look at S&P 500. Okay, so we basically in this structure, can I draw without that? Okay, I'm always having some difficulty here with this trading view. Okay. Just gonna pick another color. So this whole structure right here with the more dramatic kind of conclusion here, right? So we go to the level where previous demand came in. So that's a very logical place to see some kind of bounce on a local basis. We've talked about this. Quite a lot of demand hidden on the way down. So there is definitely buying there, but it's such buying that is not sustaining continuation, but looks aggressive. Why? Well, behind the news and all of that. So finally, we get the bar that compresses a lot on as an exhaustion, attempt to go down, break through the level, limited result, no follow through, and the follow through to the upside, which has increasing demand behind it. right? So this is the best bar out of those big bars that we kept discussing on the way down. And as it's the best bar of the level, showing improvement by the demand, the next thing for us to observe is the test. The test is pretty aggressive in terms of how bullish it is, higher highs, higher lows, supply comes in, quickly being absorbed. We see this in the tails, in the closes, in the bodies of the bars, suggesting continuation. So we're going to the next level, which is basically this right here, right? So next leg up, next test. Test is better here than test of the demand on the way down. It's just much stronger. And then this bar comes, and we've talked about this bar in our classes as well. Ease of movement. So we have another improvement by the demand. We have improvement in terms of just volume coming in here. So this is great. But supply is coming in as well on this bar, on this impulse bar. So it starts to decrease a little bit. And here I was thinking, okay, maybe we're going to go into some kind of compression, retest, and then we're going to exhaust into like this level. But that didn't happen. This next impulse bar, which is an ease of movement, suggests further up, suggests that we're going to go to the next level, that we might overcome, that resistance. And we're seeing that. As we go up, supply is coming in on the last impulse, but still test is pretty much okay in terms of the result. It cannot produce a lot of things. It definitely improves. Supply improves here in terms of the duration, in terms of the spread, in terms of the body, in terms of how much of the previous impulse is covered. Also, in terms of increase of the volume signature itself. But it still holds. So therefore, today is still to the upside. Okay, so S&P. So these are just observations. Lots of strength. The question is more of like, where is it going to lead us? There you go. Okay, sorry guys. Really messy here on my charts. Yeah, I was looking at this. This is kind of an interesting idea. Can I move it? Yeah, great. Oh, fantastic. Yeah, could we still go up, be in the overbought condition, but converge into some kind of a more contracted pattern? So this was an idea here. So with that, how would we look at this? Could we still continue up and then see if we could here and even higher? Yeah, I mean, like we could have this strength right here suggests complexity. I mean, like we could have like still very much a continuation like this. I mean, this probably as a continuation, as an idea, would be my idea number one. Number two idea is just if everything that's going on in Iran is going to prolong, and that's going to start influencing the supply chain more. And I'm thinking a lot about like, if at some point China gets involved more, even militarily, so then the number of countries involved in the conflict, from let's say Great Britain, US, all Europe, Middle East, Ukraine, Russia, and then Asia gets involved, then I think we have a really more evident supply chain deterioration throughout the world, and that could lead to some kind of like more sharp decline. But this is more like in the black swan, but possible. All right, Bitcoin. Well, it's going up. So, I mean, here we just observing how at this point it's just trending, right? Because we kept talking about like this point as an emergence of the deviant, stop in action, sell in climax, capitulation, then change of behavior as an automatic rally. Testing, phase B rally, where we have higher highs, higher lows. This actually is good because in both cases it slightly overcomes, so that's a slight element of strength, but the reactions here are just way more than this, right? So by the characters, so that still suggests that you're in the trading range. And then you have to have some kind of last attempt by the supply to break the structure. And we're trying to break this structure right here, which is upsloping. So with that, supply contracts, result, and the character diminishes into the higher low. So, and that was our call that we're seeing, like this improvement by demand and deterioration by selling. This was really great spots to think about the points of entry right here. You could definitely do the continuation play as well. I thought that this bar was interesting as well. Now we are at the resistance and at the confluence here and here, and we kind of came into this initial test of this break. So we're right at the test of it. Supply definitely comes in here, less supply here. So I'm thinking maybe like, okay, we're doing something like this, only less. If we start accelerating here, then okay, maybe we could spend more time here. I mean, could we possibly, let's say, like go back into this level and still go up? That could be some possibility there. I probably would be, my choice number one would be concentrating on, could we absorb the supply that's coming in at this level? So in this area right here, could we hold it? If we do, then continuation. If we continue up, then we're going into this area. Therefore, we might have some kind of acceleration. So let's say like momentum increase. So let's see what's going to happen.
So for me, yeah, I'm watching this too. Like, that's, if that does happen, there's a huge correlation between Bitcoin and software companies. Okay, they have the same type of investor. It's kind of like that high growth, like really risky betting type of trader investor. They want to see that. So if Bitcoin does that and IGV goes up, and then the AI gets hyped up with Google, Microsoft, Meta, Amazon earnings, then on Wednesday, yeah, Hut, IREN, and CoreZ definitely will benefit. But we'll have to see, right? I don't know. It's really risky to play that thing into Wednesday. There's so many earnings into Wednesday afternoon after the close, and you can't trade. And it's just like, well, you can trade, but it's like the liquidity is so tiny at that point. It's like you don't know if it's real or fake noise coming in there. Anyhow. Okay, yeah, you're still skeptical, huh? And you want people that, like, I mean, this is a huge debate that happens all the time about this stuff. Same thing with technical analysis in general. There's always like huge debates about it. It's like, what the hell? This stuff is not better than random noise, this and that. You can go to the conference conference here, May 28th to May 30th. I think the longer this society keeps getting donations and money from me, they can keep doing this stuff, and the people will present their things over there. Yeah, you can see it. You can go like here, the first presentation, 10 a.m. Cyclics, the science of cycles. Dr. Richard Smith. So he's the chairperson of this whole society now. He took over for it. Michael Howe, the debt liquidity cycle, approaching super cycle that dictates financial crises. Ian McKay, tidal planets. Do Venus, Earth, and Jupiter shape the cycles of the sun and the economy? All right. We got Christopher Carolyn, calendars and tides, seasonality, signposts. Jani Mittinen, okay. Hormonal cycles and the fourth turning. Okay, they can talk about periods and stuff. Ray Thomas, okay. Spartak, Afrasiev's nanocycles method of accurate dating of geological deposits. And Vars von Tienen. So he made all the software. He did all the work. He has 2 books. Look him up. Lars von Tienen. He has 2 books on this stuff. Cycle consensus scoring, an evolved framework for forecasting economic and market cycles. So he's an engineer. So there you go. You know, there are people there to talk to. I think the thing is, like, people don't even take this stuff seriously. They don't even want to talk about it. That's a problem in itself. They just like go like, this is horoscope. This is astrology. Why do I bother even studying this stuff? Right? You already got people with that attitude, and then they don't even want to look at this stuff. See? That's the problem. I mean, this was serious work in the 1900s. People really looked at this stuff before, but nowadays it's like it's pseudoscience. Why do I bother? Right? So they don't even bother looking at it. I already told you. I already told you guys this was studied in Russia, right? Kondratiev, he was looking into this stuff. All right, this Nikolov Kondratiev, all right, he got sent to the Gulag. He was a Russian Soviet economist and proponent of the new economic policy, best known for the business cycle theory known as Kondratiev waves. Despite being a Soviet citizen, he was not a Marxian economist. Oh, that's a problem. That's a problem. Time to go to the Gulag. So he was the early leading figure of Soviet economics and promoted the NEP's system of small private free market enterprises in the Soviet Union. Whoops, that's not going to be good. Kondratiev's theory that Western capitalist economies have long-term 50 to 60-year cycles of boom followed by depression gained recognition inside and outside of the Soviet Union. Kondratiev was condemned and imprisoned in 1930, but continued to work until his execution during the Great Purge in 1938. There you go. Sorry, guys. He's dead. So, you know, I mean, like, the thing is yeah, people are not going to take this stuff seriously, right? It's just too woo-woo for people. I think something is there. The problem is you're going to have to get a lot of data from Babylonian times, before Babylonian times. Who knows how many times human civilization has risen and fallen before, you know, we even have records, right? All those records are probably all gone anyway. Who knows? So, yeah. Okay, but yeah, you can look it up. Go Wikipedia, look this stuff up. Technological innovation theory, demographic theory, land speculation, debt deflation. There's a lot of things that happened before, right? I mean, this stuff has happened before. Immigration, demographics, technology, definitely, right? Right? Some nomads come up with a compound bow and all that. They'll change shit. You guys know how to farm certain crops. That'll change something. Climate, that'll change something. So yeah, it's there. We know it's there. The question is how does that affect everything else? Can we actually measure this in a way that's useful to us? And that's what's going to happen. Eventually you're going to have to learn all this stuff anyway, somehow. So yeah, go figure it out. That's what these guys are going to do. Okay, so yeah, there's a conference. That's just day 1. I didn't even go through day 2 and day 3 yet. Come on. Tom McClellan's going to be there. He's a big boy of technical analysis. He's going to be there. So there you go. So I think this is realistic. I think there are things to this. Whether or not, like, I believe, like, DeMarc is like, oh yeah, there's like patterns. See, the thing with DeMarc, he believes that there's a patterns, right? There are patterns. There are patterns that keep repeating. Okay, and with that, he can understand, like, oh, as long as I understand the patterns and recognize the patterns, I can inform myself. I combine that with the cycles, you know, and then if I see a C5, if I see a 13 or a 9 with a C5, with the bottom of a cycle, with the top of a cycle, I think when I combine the two methodologies, I can get a green light to go like, okay, this is the top, this is the bottom, this is the top, this is the bottom, boom, 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 boom. Right? That's what we got to figure out mechanically. Right now, we don't really have too much of that. The cycle guys will just be like, okay, I see a major cycle on the daily. I compare that with the weekly, see if there's a sine wave going up. If I see the daily going up with the sine wave of the weekly going up with the monthly going up, then it's like a good time to buy, right? That's what they would do. So I think there's something to it with the cycles. I do think probably DeMarc has hit on something with the patterns. There's some kind of repeating pattern, fractal nature of human behavior that's seen with patterns. And then I combine that with the cycles so I can align the two, and then I could have a better chance, probability that the trade will be correct. That's all I'm doing. I'm just trying to increase the probability that I will be correct. It's not a crystal ball. I can't predict everything, right? But at least I will only pick the correct trades compared to someone else. That's it. Like, why would I go long before April? Right? This saves me a lot of headache by staying in the S&P 500. I could just stay out of here, do something else, look at something else, right? I look at oil, I look at gold. I could just stay out of S&P, wait till April, go back in the S&P and ride this thing back up. See, this saves me some time. I can also like look at the DeMarc, right? I can go like, okay, let's go to the weekly DeMarc. Let's look at semiconductors on the weekly. I know semiconductors is a big driver of the S&P 500, and then I can use this. Okay, and that's what I'll use. Oh, come on. Jeez, I gotta refresh this thing. Yeah, so okay. So last April. Let's see what I see. All right, I got C down here. Okay. Next target is 414. We hit it. We finally hit it in April. Okay. That's it. We're done here. Now we're going above it. All right. So we got a 3C. You know what? If this is a 3, then there's going to be a 4 and there's going to be a 5. So this is the biggest wave, right? This is probably the biggest wave we got here. Okay? Because the 1, 2, 3 is the biggest one we get. The next one, the 4 and 5, will be the end. But if it's a bubble, depending on where that 4 is, we're going to get a new target for that 5. And it's going to be big, probably. Really big. So I can use this DeMarc. I could go like, yo, tell me the next target once you make that 4. Once you make that 4, I can figure it out. So that's it. Yeah. So so yeah, I'm trying to see if I can combine the two. I got the patterns, okay, the fractal patterns that DeMarc figured out. I combine it with the cycles. I align the two, and then I could be like, yeah, this is the best place to be. And that will give me my best play. So I think that's the next step. That'll be the next step. So it depends on which one you pick, right? So let me go back. So you see the 1, 2, 3 here on the R. So Lars von Tienen, he made up this AI algorithm to rank the cycles. Okay, and you rank them by 1, 2, and then 3 would be the next one coming up. I think the 3 might be coming dominant later on because I start seeing it more and more, but in other things. But that's the ranking. The other thing is the stability. So stability meaning that like it's the cycle appears to be very, very stable compared to the other ones. The other ones are kind of like loosey-goosey. They just appear and disappear in dominance. Like the 200 seems to be always very dominant. Okay, like, and you're gonna have to read his books because then he's probably gonna tell you like how do you determine the stability, how you determine the dominance. It's gonna have to be digital signal processing, right? He's an engineer. So if you open that book, you're probably going to see fast Fourier transforms. You're going to see a lot of like statistics in there. And it's going to have to be like, okay, this is how I determine it. Now compare this to the other guy, right? The other guy, that Norwegian guy who just goes into Excel and starts randomly moving around a sine wave and going like, well, it looked like it hit here before, so I'm going to move it over here now, right? That's not very methodical. So the algorithm already picks this stuff. He's doing a lot of the heavy lifting right here. Okay, with this. And then the next column is like strength. Like how high these peaks appear. The higher they are, the more likely they are the dominant forces. Okay, so not only we have stability meaning like I can probably like if I pick different data points, I'll still see that 200 somewhere, right? That's what he's meaning. It's like it has stable phase or something. So yeah, you're gonna have to read his 2 books. He has 2 books. Okay, he has 2 books, and so I pick out 200 and I pick out the 131. I'm not picking the 300-ish ones yet. The 300 is coming up, but I'm picking the 2 top dominant ones, and it creates the pink line, right? You're adding 2 different sine waves with 2 different phases, and that's why I gave you that Agartha video with like okay, you can describe a wave with a triangle. That's basically it, right? It's just a sine of 2 sinusoids. That's it. So yeah, that's it. Oh, that 777 guy. Yeah, he's done like HB. So HB was interested in stocks. So 777 was like long Bitcoin for a while. Like the whole earlier he wasn't. So I don't know. I didn't watch that CT show. I don't know what he's saying. But he had some shows. I don't know if he just saw me making shows and he wanted to like make his own stock shows for a while. But he's been giving stock advice before. I know like before because I didn't come into CT before like 777 left when I started watching CT. But I know like HB like used to listen to him for stock advice. So yeah, he was listening to him, and then after when he disappeared, HB listened to me, right? And that time I was like long Palantir, and then all that shit. Yeah, then he started listening to me. I don't know. You shouldn't be listening to anyone, honestly. You shouldn't even be listening to me. I'm just giving my thoughts. I'm like, this is how I do shit. I don't know. I think there's something to this thing here because I'm trying to explore more. This keeps me, this keeps my brain active. I'm just kind of like going like, oh shit, what the hell is going on? There's something inside the markets. So yeah.
If you are in a position
So I'm gonna go up to 15 minutes. This is where the interesting stuff happens. I think he starts
to
talking.
down,
He's talking about oil right
but
here.
like oil just is populated with those type of spots. But I'm sure like SEC has all of this AI algorithm that.
Oh, it's all about options. Yeah, because CT did options before he started his show. Actually, like he went on Grace's stream one time, and her brother was there at the studio, and then CT was talking to him about options too, because her brother was interested in options, and he was like, "Yeah, it's hard as shit," and blah blah blah. I don't know. Personally, I don't know. I have no opinion on options because I never use them. I can't say it looks hard to me because it's multi-dimensional. It's more than just price. It's price, time, volatility, and who knows what else. There's a whole bunch of stuff that people ignore. They just look at volatility, time, and price. So you have to get the volatility right, you have to get the time right, and you have to get the price right. So you have to work with three things and get them to be at the right intersection for you to like be like, oh yeah. Most people just use options like insurance though. Like they're not using it to trade. If you're using it to trade, then yeah, you got to be more sophisticated.
See it way better, but pretty fascinating as kind of like the market itself. Obviously, the faster it all ends, the better it is for all of the people that are there. So okay, I think that's it on the market. So let's maybe, gold is not interesting, so there is no need even to do anything there. Okay, let's see the questions. From @TY, thank you. Good morning, Raman. What is so confusing to me is how crude oil prices are weakening despite an obvious supply shortage. People say price is being manipulated, suppressing the price. Is that the case? Okay, yeah, so I've touched on this.
Yes, that's correct. Everything I tell you here can be used anywhere. That's why I keep everything I do general, right? I just talk about cycles. I talk about the chart, and I go like, you see this? How you trade that is up to you. I just buy shares. If I do leverage, I just buy leverage. That's it. But if I short, I'll do an inverse. But you can definitely look at that and be like, wait a minute. I know oil won't go up again in August. So maybe if I get a call that's set like in October and then have a strike price of this, and then assume with DeMark, I know the price of oil is going to go down to here, then yeah, I could set up an option play. Yeah, I don't know. If you want to do it like that, go ahead. So yeah, that's what I'm saying. It's just like, what?
Maybe gold is not interesting, so there's no need even to do anything there. Okay, let's see the questions. From @TY, thank you. Good morning, Raman. What is so confusing to me is how crude oil prices are weakening despite an obvious supply shortage. People say price is being manipulated, suppressing the price. Is that the case? Okay, yeah, so I've touched on this here, right? So some manipulations there, yeah, possibly. And we kind of see those instances. Now, I think, again, it's a waiting game right now with the two blockades on both sides. Like what's going to happen. There's a lot of like that stuff that you could probably read. I'm not an expert on that, but I do read that analysis as it influences the market. So with that, our anticipation is that upon the resolution of this conflict, one way or another, we're thinking that price still will retest this gap right here. But would it go there from where it is right now? This would mean quick resolution. Or would it actually go higher to 150, longer resolution, meaning that more conflict, it grows, it accelerates, it has more participants. Most definitely China is more involved, including militarily. They could influence shipping routes as well. They have the spots, where they could have a blockade as well. So imagine like multiple shipment routes blockades around the world. What's going to happen? Supply chain, boom, not there. So again, I'm not seeing this as like a doomsday or anything of that sort. When you look at the history of like governments and all of the countries, you always see this geopolitical game. So it's always going to be there, and it's just unfolding right in front of our eyes. So if we look from above, then anything can happen. You just have to trade it in the flow of the market. Specifically here, I see a lot of intraday opportunities. I see a lot of short-term swing opportunities that are still great. It looks like, oh, we're in the trading range. But look at the movement from about, $78 to about $115. When did the price of oil move like that with so much volatility? So it's just like a very opportunistic time to make money in those time frames. Okay, so hopefully, yeah, and the shortage of supply, that's also a very interesting thing because it seems like, okay, 20% is being blockade at...
Well, I mean, he deleted all his streams, so there's no old streams anymore. The channel is still up, so I don't know. I looked at one of his quote unquote finance streams, but like it was just him trying to pump up MSTR. He was like really bullish on MSTR, like 2 months ago. MSTR. I don't know if he said anything else besides that, but it was pretty like basic. Like he didn't go into any like reason why he's bullish or nothing about that. He was just like, the market is bullish, it's gonna be bullish, this and that, and all throughout. Like I think once the Iranian stuff happened, he just all he cares about is MSTR. Like there's tons of other stuff that's like way better than MSTR. I forgot completely about MSTR once the Iranian stuff happened. I'm just like, who cares about MSTR now? It's like you got oil, you got like so many other things to trade. It's like, fuck that. Software, I didn't care nothing about MSTR. Like MSTR just caught up with HUT. Like you could have got HUT, IREN, Core Z. Oh my god, whatever, who cares? It was just like, who cares? Oh my god, fertilizer. I was already talking about fertilizer like a month ago. You got CF. Yeah, there's tons of fertilizer stocks. But now it's like, dude, now it's like, nah, you don't need to care about that right now. You can wait to get into that. So like I was talking about corn, right? Corn, sugar. Well, yeah, fuck sugar. Corn, wheat. Like those will be the ones that will be going up later. Like who cares? Like dude. So yeah, I don't know. I don't know what, like when I caught it, it was just like him playing. Yeah, that's not an ETF. That's a company. Yeah, I know about Mosaic. Yeah, I know. but Mosaic is not gonna be as good as like these are the two I like. Mosaic maybe later. So that's the one. CF and IPI. Okay? Those are the two stocks I'll be looking at. CF and IPI. Those are my favorite for fertilizer. CF more than IPI. And there's other ones too. So I think I put that in a list somewhere. But yeah, I already covered that like a month ago. I think I covered that just before CF started blowing up too. I was just like, whatever. I'll wait for it to come back down. I'm not gonna talk about it no more because it's like you don't want to buy at the top, you know.
At the Strait of Hormuz, and it should influence the price. It did, and that's why the
Is that the ETF with the? Oh man, let me see. Like these are the ETFs here. I don't know if I mentioned Agra. Till, it's got corn. Okay, you got wheat, you got soy, and you have sugar, which I don't like. I don't want sugar in there, but it's too bad. It has sugar. Then you have like PDBA, which has coffee and cocoa. So that kind of like messes that one up a little bit. Then Veggie and Crop has like the companies with like that deal with fertilizers and agriculture related stuff. So more than just like fertilizer, yeah. So I don't know. That's all I got.
price is higher. But at the same time, the world is adjusting and increasing the supply, not exactly to the highest point, but there are other ways, to provide that supply. And I think that's why we're not moving higher. How long can it last? I don't know. I mean, like, again, I'm not an expert on this. I'm just giving you like my amateuristic opinion on the geopolitics. Like, I'm not an expert, so I have no idea. Hopefully, they're gonna resolve it like as soon as possible. Okay, can you check on the specific crypto? Could I maybe ask you to go with the crypto with Alessio? I mean, like, just email him, ask him what do you think about like this crypto? Because I'm not doing cryptos at this point. I'm concentrating more on the futures, stocks, and he is our expert there. From Michael. Hey, Michael. If Iran opens the Strait of Hormuz, the LNG terminals will cannibalize each other. If the impaired Gulf states renege on their orders, we will off work as the chip sector cannibalize each other. Yeah, again, Michael, I'm like seriously not an expert on this, so, but I'm really happy to hear your opinion. Okay. A deterioration and exhaustion, the same thing. I understand the idea behind those terms, although I don't know the exact definition. From Vic. Really great question. Deterioration and exhaustion. What is happening here relative to this? Deterioration. What is happening here relative to this swing? Exhaustion. So both could be at the same place, and both could exist separately, and both could be looked through different concepts. So I would be thinking, you could be thinking about the deterioration as an like an outcome of the actual bar, actual swing, or actual structure. And you could look at the exhaustion as the ending result of also the swing or the flow sequence of the bars, or let's say like some kind of structure. You could see how throughout the whole structure there's going to be a deterioration of one force going into its final exhaustion. Vic, does that help? Hopefully. Yes. Okay, great. Yeah. Hey guys, those of you who are coming in. Markets are run by the composite man. Well, I absolutely agree. And again, we see that as a confirmation, like a quantifiable confirmation, where we could see big orders coming in at the points of, let's say, like this. Like we see that, right? And we see how the price is being influenced. So with this type of action, both tails, by the way, not just the up tail, but the down tail as well, you see that there is a lot of sellings going on. So that's evidence of institutional selling and institutional buying as well. There is some kind of like this almost mythical belief that institutions are always correct and the retail traders are not. That they're far from the truth. I worked in the hedge fund industry for a little bit. I have a lot of colleagues, friends in there, and I could see how it's so diverse in terms of their results. And you see this evidence also in the publications and the news. And yet, I work a lot with the retail people, and I see a lot of great results.
So, like, the hedge funds were all short going into April. I mean, that's another reason why semiconductors keep going up. It's like all the hedge funds guys, they were all short, man. They were all short going into April. And then once April happened and the taco happened, it's like they're all chasing everything going back up. It's like, holy shit. So yeah, hedge funds doesn't mean they're right. Okay, that's definitely the case. They're not right. Let me skip ahead here. Skip ahead.
All right. From Tren, oil is moving within a wedge-shaped triangle. Do you think that it follows a similar pattern to gold 2025? Yeah, so we've talked about the trading range that we see here, right? So it could be the same idea for gold. I could definitely see gold is a little bit weaker in that pattern, right? So it has more prominent lower highs, lower lows with more volatility. And that's, the difference in these two structures. But yeah, a great find. Yeah, thank you. Okay. Okay, big campaign in TTF. Okay. Okay, here's the next question. When the general market forms a three-top pattern, how can one distinguish whether it's a distribution process or a wide range reaccumulation zone before breakout? Okay. And three-top pattern, I would assume that's something akin to what? To the dome, to the head and shoulders, to the Wyckoff phases, 3 phases, A, B, C. Well, whatever it is, it doesn't really matter. So I'm gonna answer this in general terms. So the question that you're asking basically is, we had an uptrend like in oil here, and now we're in the trading range. How do we know that we are either going to go up or going to go down? First of all, coming back to the question on the bias games, this is exactly what we study, what we practice, what we teach our students, what we do like each day. Obviously, upon the completion of the structure, I think oil is not done, being in the range. So there is no like evident directionality at this point. So you could only like observe the range, see the character, compare, demand to supply and all of that. I mean, I could make those type of observations for sure. Like to me, it looks like, yeah, there is some improvement by supply that we could see on the second leg down. Supply deteriorates relative to the first change of behavior, but the way how demand is going up right now is slightly weaker than before. So that still could suggest some testing, and that's why the trading ranges need to unfold, and you need to let it kind of like, unless you trade the trading range itself, but if you're trading the campaign, there is no edge here. You're only thinking that you want to trade this is because of how volatility came to this, and now like all of the previous participation, whether you did this or not, like pushes you there. And it's very hard to wait until it's the correct time. So coming back to what's the difference between reaccumulation and distribution, I would approach this from a different perspective. I would say, how about you think of it from the perspective of the dominant force and the opposing force, and not from the perspective of the bias. More and more, we are going away in our classes and in our trading from an idea of a bias itself. It kind of becomes more of a legacy terminology for us. Bias. I'm kind of starting to almost dislike this word. And the reason why is because bias suggests some kind of emotional attachment, subjectivity to it. And once you pronounced your bias either to the world or to yourself, you already have that emotional connection to that story. So then what happens? If you're wrong, depending on your way of how you behave, you're going to be either in that position, prolonging, waiting for it to kind of go your way, and it never does. So you're going to have a loss, and then you're going to have like a small mini crash of identity after that trade. Those are microscopic, but if they happen each day on multiple trades throughout the whole month, year, you're reaffirming the belief into the specific identity that you have as a trader. I'm profitable, I'm unprofitable, I'm consistent, I'm not consistent. So any of those could be confirmed. So with that, I really like the idea of neutrality in the analysis. You just observe things. It's an uptrend, change of behavior comes, character of the upswings relative to the character of the downswings improves or deteriorates. Structural results. Supply is showing more structural breaks or structural improvements relative to the demand. So then you start seeing the flow from the background into the trading range, and you see whether the dominant force, even though it might deteriorate, and our opposing force, it might increase in its presence. What is actually happening? What is the result of that emergence of the opposing force? So you just go through the standard sequential bias analysis that we do. And that's how you determine reaccumulation or distribution. I would most definitely would not like to see from you something like this Oh, I'm looking at the trading range and I'm seeing a spring or a UTOD. This means that you are labeling the trading range before understanding what is dominant, what force is dominant. So, absolutely a no to that. You absolutely should be avoiding labeling in Wyckoff terms trading ranges before you understand the dominant force. Okay, great question. Yeah, I like that. Okay. Hello, sir. Thank you for your wisdom. It's really helped me to read the market sentiment. Okay, great. Yeah, I like that. Yeah, I always say there are 4 primary data points for us that we use. We don't use the indicators. I mean, occasionally we'll have something like for stocks, like a relative strength, but even that you don't have to use. You could use comparative analysis. Sometimes our students will have, like um, VWAP or like something like that, more to the institutional side of things, where they see some levels during the session. That's acceptable, I think. But we're not using like MACDs, RSIs, or ADX, like any type of indicators. We don't use necessarily like those double top, double bottom, head and shoulders, those type of things. We look at the structure of the moves, and we look at the bigger structures. We'll uptrends, downtrends, trading ranges. We look at the swings that construct those structures. We look at the character of those. We look at the relationship of effort versus result. And at some spots, as you were implying, we could read the market sentiment. So the 4 primary data points for us is price, volume, time, and sentiment. So the first 3 are understandable. They all on the axes of the chart, but the sentiment is a little bit elusive. The key to the sentiment is that you could only read and have the correct actionable sentiment at the point of extreme. And this is the only time when we want to read that sentiment. So, for instance, on that big spiky bar at the beginning of March, this is where the sentiment became extreme. So, therefore, you're going to have lots of buyers coming in. That's going to create the liquidity as an opportunity for institutions to take profit and to sell. And obviously, news driven as well. So, yeah, we definitely can do this. Probo is saying, agree 100% on your feelings of bias. Yeah, and that's why it's a little bit confusing. We're like publishing bias game books, right? So we have still, like in WTC classes, the bias game that we do on a weekly basis with students going through the chart together. This is a homework, so I see like how people work on this. But legacy term means nothing to the reality of how we look at the chart now. I mean, it was a progression of its own. Like our knowledge progressed so much from that point that now it just shifted into different understanding. Bias is not important. If anything, bias is a huge distraction for our minds. If you don't have the task of identifying the bias, and you only have the task of identifying what the dominant force is at this specific level, and if you're seeing some kind of point of entry, your goal is not to understand the bias. Your goal is just to go with the flow of the dominant force to the next level. And at the next level, close the position, or second decision would be to trim. That's all it is. There is nothing else.
Okay, you get that now? I hope you got that. I think that was the major point in the last 15 minutes there. It's like your goal is to go with the flow. What's the flow of semiconductors? Up, 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 up. Right? Until it stops. That's it. I don't care what I think about it. It's a bubble, it's not a bubble. Doesn't matter. It's going up. I follow the trend, right? If that's what you want to do. So that's why I gave you that whole thing with the car, with the AVIX, CAR. It's like the same thing. If you wanted to trade that bubble, you just follow the trend, right? Up, 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 up until it stops. Until something looks like it's stopping. Why? How? What? You got to identify it. And that's what they do. And like you listen to what he says. Like, I don't look at anything. I don't look at MACD. I don't look at fucking any blah, blah, blah. No indicators. Nothing. Okay, you just look at the candles. Look at the candles. That's all it is. Pure candles and volume. Pure candles and volume. So, yeah, I haven't identified anything with the semiconductors. That's it. As far as like layoffs, there's a lot of layoffs going on because now they're using AI. They don't need a lot of people doing a lot of administration work, coding. I think I don't know which company said like they are replacing a lot of coders with AI now. AI can do a lot of coding. They just eliminated a whole bunch of jobs. So I think that's normal. That's what's going to happen. We're going to eliminate a lot of jobs. People are going to have to get UBI. That's it. I think women now are the majority of W-2 payroll taxation. So women predominantly make up the workforce now of W-2 paid salary people. I guess everybody else is 1099 or whatever. Who knows? Contract work only. Yeah. Oh shit, you're on contract? Damn. Well, I don't know. Fuck. Okay, yeah. Yeah, just learn stocks and you don't need to worry about that shit. Who cares? If you can make 100% like here and there and everywhere, like why you need to work? Why you need to work? Fuck work. So that's all I need to show you with that. So there you go. UBI, baby. It's all about UBI. That's all it needs. Okay, so this is the last video I'll play. I don't think we have time to get into Boyd. Maybe tomorrow. Maybe I'll do it tomorrow. It's 2 hours already. But I'm gonna show you the first e-girl. The first ever e-girl.
1996. The internet is basically still a rumor. Most people are getting online through a dial-up modem that sounds like a robot having a mental breakdown. And the 19-year-old college student in Pennsylvania just pointed a webcam at her dorm room and left it on. But within 2 years, 7 million people a day were watching her. Before the era of Paris Hilton and Kim Kardashian, and decades before the Twitch streamers of today, there was Jennifer Ringley. Jennifer Ringley didn't study anything that neatly explained what she was doing. She was an economics major at Dickinson College in Pennsylvania, a self-described nerd who loved programming and happened to be raised as a nudist, and in April 1996, bought herself a webcam mostly because she wanted to see if she could make it do something interesting. The something interesting she landed on was programming her webcam to automatically take a photograph of her dorm room every 5 minutes and post it directly to a website. Not a video. Remember, this is 1996 dial-up internet. Loading a single image took really long. It was just rapidly taken photos, refreshing automatically around the clock. She called it Jenny Camp. She sent the link to a few friends and family, including her mother, who apparently couldn't just phone call her like a normal person. Her mother used this to check in on her, and that was the entire intended audience. Then a journalist at an Australian newspaper stumbled across the link, wrote an article about it, and the story spread like wildfire. Jennifer's server crashed within hours of the article going live. Her internet provider called to tell her she'd already blown through the available bandwidth, and she was barely a week in. Jennifer Ringley had not set out to be famous, but on the internet, which was new enough that people were still figuring out what it even was, had never seen anything like this. Before JennyCam, the only webcams that existed pointed at boring objects. There was a famous one at Cambridge University aimed at a coffee pot so engineers could check if it was full before walking down the hall. But Jennifer Ringley pointed hers at herself and her actual life, and whatever happened to be happening. And stick around to the end, because where Jennifer is today is honestly the most unexpected part of this entire story, and it's the exact opposite of everything we've talked about so far. What people found when they logged on was not particularly dramatic. Jennifer sat at her desk, she read, she fed her cat and ferrets, she slept. The camera caught all of it, unedited, unfiltered, just a person existing in a room. And somehow that was enough. Millions of people found it completely compelling, which says something about human nature, and I'll leave you to sit with that. By 1997, Jennifer had already clocked that she was onto something new. And like most broke college students, she started charging for access. Not to unlock special content, but simply to see the feed update faster. Free users waited 20 minutes between photos. Paid subscribers at the crazy price of $15 a year.
Oh man, the first e-girl, man. She figured it out. She figured it out.
Got updates every 2 minutes. Jennifer Ringley had accidentally invented the tiered subscription model before most of Silicon Valley had even thought of it. Patreon and other certain platforms wouldn't exist for another 15 to 20 years. She was just a college student with a webcam and a dream, and she had already figured out the business model that would eventually power the entire creator economy today. She graduated, moved to Washington, D.C. with her increase in income, and wired her new spacious apartment with 4 cameras covering every room.
Yo, look at those shoes, man. Look at those shoes. Did all her simps pay for them? Oh, shit.
With 4 cameras.
Look at that. Look at all that shoes, man. Come on. God damn, this was 1996 to 2000? Fuck, bro.
Every room. The site became jennycam.org. She listed her occupation.
Bro, are you guys as old as me? I had a shitty webcam like that. It was so crap, dude. It was like lower than 144p. It was like 1 frame per what? Like what the hell? It was like so shit. Where are they now? No, she left the internet. She left the internet, man. She was like, I got my bag. I'm leaving. I want to be anonymous again. This is bad. Everybody knows me. Yep.
Occupation as web designer, which was technically accurate since the web she was designing was entirely her own life. And by 1998, she was appearing on The Late Show with David Letterman, walking out after Samuel L. Jackson. Let that sink in. Letterman told her on air that JennyCam was, and I quote, the perfect idea for the internet and would replace television because people are lonely, right after admitting he didn't really care about it, which is perhaps the most
Oh man, that's Boyd, bro.
lonely.
That's Boyd.
Right
Oh, they're lonely people. Yeah, this was 1996, man, and she stopped like in 2000 or 2001. Yeah.
Admitting he didn't really care about it, which is perhaps the most David Letterman sentence in history. She was the subject of art exhibits. European fans built an automated program that tracked her movements through the apartment.
Like you see how old it is. It's just like, dude, this is 1 frame per 20 seconds.
Whether she was awake, at her desk, or in bed, without even opening the site. And someone even wrote a poem in her honor. Jennifer Ringley had become an actual celebrity. Things were going great. Then came a man called Dex.
Oh no, stalker alert! Stalker alert!
In the year 2000, Jennifer began a relationship with Dex. The problem was that Dex already had a fiancée, a woman named Courtney, who was also live streaming and one of Jennifer's closest friends. They lived in houses just across the yard from each other. Courtney had publicly posted the details of their upcoming wedding, and then one day on camera, In front of thousands or even millions of viewers, Jennifer announced she and Dex were in love. She got a tattoo of his name on her ring finger. She posted a journal entry describing their love as something no two people had ever felt before. Courtney
Oh man, this is Ruby and D-Dog.
attempted to check herself into a mental hospital. The Washington Post called Jennifer an amoral man trapper. Traffic to Jennicam, however, jumped 40% that month because the internet always loves a good scandal. The Dex situation cracked something that had been quietly under pressure for years. Jennicam had always worked because of a single promise. This is unfiltered, but the bigger the audience got, the harder that was to actually believe, even for Jennifer herself.
Yo, Blockbuster, man. She got 2 Blockbuster VCRs.
Because there is a difference between living your life and performing your life for millions of strangers. The audience changes you, the scrutiny changes you, the threats and hackers and the men building literal software to monitor your sleeping schedule, all of that changes you, whether you wanted to or not. She had invented something the internet had never seen before, live streaming someone's own life. In doing so, she was also the first person who had to figure out how to deal with its problems. On December 31st, 2003, Jennifer turned the cameras off. She cited PayPal's anti-nudity policy making payments impossible as the official reason, but in a 2014 interview on the podcast Reply All, one of the very few she ever agreed to, she was more honest. She was just burnt out. 7 years of being watched, the relationship with Dex had ended long ago. She wanted her old life back, and the only way to get it was to disappear entirely. So she did. And here's the part nobody really talks about. What happened to Jennifer after all of this is honestly the most interesting part of this entire story. Today, Jennifer has no social media, no personal brand, and no presence of any kind. She lives completely offline by choice and has done so since the cameras went dark. She built a subscription content model. She built a parasocial relationship between creator and audience. She arguably inspired reality TV. For example, The Truman Show and Big Brother were directly linked to Jennicam at the time in the press. She proved that an ordinary person's unedited daily life was something people would not just watch, but pay for. Every influencer with a ring light and a Patreon, every streamer with a subscription tier, every creator who has ever charged for closer access to their life, they are all working inside a structure people like Jennifer Ringley built accidentally in a college dorm room in 1996. Jennifer got married and took the last name Johnson and described herself in a 2016 BBC interview as a computer programmer living in California. The person who was watched by 7 million people a day quietly became one of the least findable people on the internet, which is either a tragedy or power move. You decide. And more on that, I appreciate you guys for watching. Your support means everything to me. If you enjoyed this, a like helps me more than you know. Subscribe if you want to stick around. I'd love to have you. Drop in the comments.
Yeah, you can check out the link in the description. Like, this channel is kind of new, and she's doing these documentaries. That's great. No, I never knew about this stuff, man. I was in school playing games. Like, dude, the internet in the school, like, man, nah. And then you had dial up, dude. You had dial up. If I used the internet at home, it would be like, bro, I gotta make a call. Shut off the damn internet already. It's like, dude, nobody stayed on the internet more than like an hour at a time, right? And you had to shut it off. Like, I didn't have enough time to be finding these freaks at that point. Like, I don't even know how these other freaks found her. It's like, dude, you got a chat room or something? You went on a chat room and people like were like, hey, have you checked this out? Have you checked this out? Yeah, fuck that. Yeah, I don't know. I'm sure like probably like the older folks, like maybe 50 to 60 years old, probably knew about this. I was too young. I think I was still too young. I wouldn't have been interested even if I found this stuff. It was like, what is this? This is boring. Why would I look at a girl like put up a picture every 30 minutes on a website. Like, why wouldn't I wouldn't even care? Like, this is stupid. Yeah. AOL chat is the only way to you remember CompuServe, like message board, like not message board, like the news groups, man, and then they had IRC. IRC was like the elites. I was never into IRC stuff. That IRC was like AIM. Yeah, I love AIM. I was like, but the real guys were on IRC, man. That's when all like the people were like, oh yeah, we know how to hack stuff here. We got all the free stuff here. We got all the exclusive porno here or whatever. Yeah, those freakazoids.
Hi everyone, Cyberyamu here. So
this is an e-girl I told Deadman to cover, but I got Spud into her. I think this is the new schizophrenic girl for the boy we need
as
right
some of
now.
you may know following my YouTube posts, I have developed a model of the Enneagram that combines it with the biopsychosocial model as well as schizoanalysis. And
Can we just get her to analyze the stock market so we can make some real money? Like, I don't want her to waste her time with this.
I don't know if they were entirely clear, so I've decided to make a video explaining it. Now, just keep in mind, this is just for fun. This is just a theory that I came up with in my spare time when I was bored out of my mind in the hospital, don't take it too seriously. But, yeah. So, the 3 triads, which are well known in the Enneagram, the gut triad, the head triad, and the heart triad, I have added meanings to them. So here you can see the gut triad, I put physical, and this represents the biological side of the biopsychosocial model. So here there's action, rest, and recovery. And I modeled this after electrochemical signaling. So I thought about how synapses, they have an action potential, and then they rest and they recover. And then the more I thought about it, I saw the pattern everywhere in the physical. I am here. Today I'm going to be explaining the basics of the
What
Enneagram.
in the hell is going on?
Well, the source.
Okay, so this is my new project. Maybe Spud will cover this. I think Spud is in love with her now that I introduced him to this. I think this is the perfect woman for Schizo Spud. Perfect. Like, what is going on? Yeah, news groups. IRC does still exist. I think IRC is the forerunner of Discord, right? Slack is kind of like the workspace, a workplace version of Discord. I think a lot of people like took a lot of inspiration from IRC. Yeah, she's definitely on a spectrum. So if you think females are not autistic, there we go. We got one right here. For you. All right, guys. Tomorrow I will show up again, I think, in the morning and the afternoon. I don't know. I got a lot of crap to discuss with these boy BSs, and who knows, more stock stuff, I assume. I'm gonna have to figure this out. My head is spinning trying to figure out what the hell we're gonna do on Wednesday. I don't know how to prepare for it. I'm kind of like, I got some shorts on semiconductors. I got some long software, but I'm not really too confident, so I can't really recommend anything. I'm kind of like shrugging my shoulders here, going like, do I have to wait for Powell to open his fat mouth and crash the market before earnings or something? I don't know. That's crazy. This really sucks. I hate it when the market does it like this. See, that's why I don't care about earnings. Like, most of the moves happen before earnings, you see? Right? Like we got like 50% on WebL and AIBU. If you jumped into semiconductors, you got another like 20-30% of SOXL. You had oil that went up 100 with you could have did anything oil U or Gush and NRGU. It's just like, why do I care about earnings? I don't care about earnings. Fuck earnings. I hate earnings. I have to worry about what earnings are gonna do. So, like, Intel was already up 100% before earnings. Okay, it went up another 20%. Wow. Like, it could have crashed 20% too, right? So it's kind of like, yeah. Anyway, so yeah, we are going to figure out what this autistic chick is going to be. She was homeless. She's not homeless anymore. She's got schizophrenia. She does all this crazy stuff. I think this is the perfect person to analyze the stock market. She is the Rain Man for the stock market. If she just spends her time focusing on, yo, I got all these charts. Can you figure out like where the top and bottom is for us? There you go. I'm into deep right now. I might still have it right out. Yeah, I don't know. I don't know. It's so hard, right? Once you get into the meat of earnings seasons, because next week is a lot of earnings, and apparently they're all on Wednesday after Powell. It's just like, bro, why you did that on purpose? You did that on purpose. I know you did that on purpose. You assholes did that on purpose to scare people and try to fake us out and be like, yo, you guys are scared. You can't hold those things until earnings. It's like, yeah, fuck you. Anyway, yeah, you can fix her. Spud can try to fix her. He's young enough. I can't fix her. I can't do this shit. I'm too old. Yeah, definitely. I gotta get her contact. I think she has a Discord. Maybe I gotta get a Discord and send it to her. Be like, can you help us? I'll pay you if you actually can predict the tops and bottoms correctly all the time. I'll get you a cut. I'll get you a cut. How about that? How about that? We don't need 777 and what. Yeah, she'll be our oracle for sure, for sure. Yeah, that's right. That's why females were the oracles for a reason. Females have the foresight, the prophecy, right? They got the mechanics to do prophecy, right? They will be the oracle of Delphi right there. All right, guys, I'll see you. Fuck, Oracle of Delphi. Shit.